three names in the red, not by much. Your big winner, United Health Group, followed by Pfizer. By the way, drug stocks had a huge move on Friday, despite President Trump's latest overture for lower prices. Check oil prices now. Joining us, Stephen Schork of the Schork Report. All right, Stephen, crude oil about 71 bucks. It looks like it's hanging in there. We know gas prices are at a 3-year high. This is when you start to get Main Street pushback. Where does it go from here?
I think, Charles, that we remain high, and that is to say oil prices in the high 60s to low 70s. I want to, really make the case that oil prices are exactly where you would expect them to be, right where they would want to be. Rising oil prices, as with all rising commodity prices, are derivative of a rising, stronger economy. So we here in the United States, I know, yes, I appreciate it. Gasoline prices are at a 3-year high. But again, the economy is much stronger, and it is better than a 3-year high at this point. So as goes the economy, so go commodity prices. So our incomes are higher, our wealth is higher, and therefore the commodity prices are higher. But, Charles, on a historic perspective, gasoline prices are still very, very cheap.
Commodities, of course, you just talked about the demand side and the prosperity that's fueling that. What about the supply side? We still have rigs coming on, and then there's always, of course, the sort of notion that someone is going to try to take advantage of this, whether it's members of OPEC outside of Saudi Arabia or even U.S. drillers.
Yeah, absolutely. With Saudi Arabia, there was a report today that they're cutting their output. But let's keep in mind the socialist cesspool that is Venezuela is doing a lot of OPEC's heavy lifting with their dwindling supply. Here in home in the United States, we literally cannot swing a cat without hitting a barrel of oil in this country. And when we look at the spreads, that is the price of oil in West Texas, which is home to the Permian Basin, the most prolific crude oil basin in North America, or I should say in the United States, we're looking at the spreads trading at a deep discount to the NYMEX delivery hub up in Oklahoma and the refinery epicenter down in the Houston market area. So what those spreads are telling us is that the pipelines carrying oil out of West Texas are jammed packed, which means the United States has plenty of supply going into the summer. Now, Charles, to address the issue with the global impact with the Iran sanctions and so forth coming and what this could potentially do to the global supply, yes, this is a very real possibility of cutting into supply. But let us not forget that we have here in the United States more than 600 million barrels sitting in our strategic petroleum reserve. And like we saw a few years ago when Libyan output was cut, oil output was cut right before the summer, we saw a coordinated release of those barrels onto the global market. I would not, if oil prices continue to move higher, I would not put it beyond this administration to announce a release of these barrels to help alleviate any supply shortages should they arrive.
I had not heard that yet. Stephen, thank you very much. Appreciate it.
Oh, absolutely, Charles.
And now there's this. The U.S. Post Office reported a net total loss of $1.3 billion.